Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. On this mediocre Tuesday, I hope you all had a great start into the new week. As always, before we jump into it, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, don't forget all the tools that I'm using and the resources, so the charting software, the broker I'm using, the strategy I'm following, and so on is all linked in the video description down below if you want to check it out. And the one thing I can truly recommend is that if you haven't done so, go and follow the link in the description down below to check or read the Elliott Wave Principle online for free, or use the same link to grab yourself a physical copy like I did as well. With that said, let's jump into it. Gonna go here. Hi, Olga. Welcome back. Is your vacation already over? Has it already been 2 weeks or has it only been one? So anyway, great that you're back here. I hope you, even if you're still on vacation, I hope you're still enjoying it. And if you're already back, I hope you had a great vacation. We are having another more or less break-even start into the day. So not much changed. We still have our $30 covered calls against our GameStop shares that expire this Friday. On top of that, we have still our Novavax call that expires in January and our Grab call that expires in January 2026. And outside of that, yeah, like nothing changed. So we're gonna jump into the chart. So you're still on vacation, yeah? So that's great. Another week for you to enjoy. While you're on vacation, are you still actively managing your portfolio, or are you not doing that at all and just relaxing? I think you should, like try to enjoy the vacation and take some time off, but obviously that's just me talking here. Anyway, where do we start? Not with NASDAQ, but let's start with usual, or like usual with GameStop, where we've seen a little bit of upwards movement last week, yeah, 25th, roughly last week, and now again moving sideways. The big question is, like, nothing changed since yesterday, since we're looking at a daily chart. Will we be able to break the 25.24, so that high here, to basically provide us with some kind of confirmation that indeed we have our correction finished here, or will we indeed get another push further down to reach the 78.6 retracement that would also mark the 100% expansion level? Yeah, so we'll just have to wait and see. So far, it looks more than it 11 days. Okay, so it was 11 days in Turkey, and now you're enjoying the rest of the vacation back home, yeah? Yeah, that also works nicely. Yeah, did you book everything separately for your trip to Turkey, or did you book like Pauschalreise, like a package deal? Just curious. Yeah, so GameStop, not much changed. Right now, it's more likely, from the looks of it, it appears more likely that we might get the push up, but I still consider it actually also a reasonably assumption that we might first get the push down into that area. Either way, we'll just have to wait and see, and we're going to enjoy the ride. Eventually, I think long-term, there's a lot of room upwards still, so yeah, gonna hold on to the shares that I hold outside of Interactive Broker, and going to write call options against the shares that I hold at Interactive Broker, in my portfolio at Interactive Broker, this way, yeah. Yeah, moving on, Barnes & Noble Education. There, what do we have today? Yeah, 31st, that was yesterday. Yesterday we went a little bit low. So the big question is going to be, so also not much changed from yesterday. The big question is going to be, will we see move up from here and basically with that have our bottom officially here, or in that last move here that visually might be 1, 2, 3, 4, 5. Is it possible that we only have 1, 2, 3? This is wave 4, and we'll get another push down into the area here. Either way, again, I think that short term we might, or there is the chance that we get the push into the 61.8 retracement, which would mark the 100% expansion level of this 3-wave move, whereas long-term or mid-term even, I expect another move then going up from here in another additional 5 waves. So either we mark the low here at the 50% extension or retracement level, and we'll get the start of the new wave here, or we'll get a push a little lower and then go up from here. That at least is my personal opinion. Right now would not mark such a bad entry time, to be honest, because one could consider setting their stop loss either below the 100% level here, so at around the $8 mark, or yeah, make a little bit of a closer gamble and take or place the stop loss at 902, so at the low that we had here, because if that is indeed the end of the corrective pattern, then obviously there is a lot of upside with very, very little risk to this point. Of course, it's possible that we only get a small push further down and then move up, so it's up to you to do your research and make your own decisions. But yeah, personally, I think that at least for the midterm and long-term future, there is quite some upside still left in Barnes & Noble Education Inc. Yes, Pauschalreise was cheaper than separately. Besides, with two small kids, it made more sense. Otherwise, we booked separately in the past. Yeah. Yeah, I'm gonna go off topic here for a second. Yeah, my wife and I, we actually used to book everything usually separately, and then only last year we once booked the Pauschalreise and was it this year? Okay, this year our trip to Turkey was actually also as a Pauschalreise, and I was also surprised about the price. So we paid like for both of us for 6 days, so 5 nights in Turkey, near Side, all inclusive. We paid 860 euro, including the flights and then the transfer in Turkey from Antalya to the hotel and back. And if we would have booked it individually, it would have cost like 800 euro without the airport transfers and with only carry-on luggage. So definitely the better deal as a Pauschalreise, and it was really, really relaxed. Yeah, I'm always surprised, you know, like I have a brother and he has 3 kids now, and they go on vacation usually to Italy once per year. And then it's like it's usually a big family thing from his girlfriend's family side. So like with her parents and her uncle and auntie and siblings and whatnot. So it's like 20 people that then drive down there by car. I mean, obviously from Bavaria, it's not as far as it would be from Hamburg. Yeah, but it's still quite a journey. And then they rent like, I don't know, free apartments there. So it's like, let's say close to 20 people split up on 3 apartments. And they still end up spending around 2,500 euro for 2 weeks. I'm always wondering why they don't just go with a Pauschalreise, just him, his girlfriend, and the 3 kids, because I think a trip to Turkey would cost at most the same, but more likely less. And then if you book at a proper hotel or resort, you also have like a corner that takes care of your kids throughout the day, depending on the age of the kids and so on. Yeah. And I just feel like it's the better deal, because also then with all inclusive, you don't have to, I mean, you still might have some additional expenses, but if you are tight on money or you just don't want to spend money, you don't have to. So you don't have to every time you want the coffee, like pay for it, or feel like having a drink, pay for it extra. So I'm really surprised if, I mean, I also used to book everything separately for quite some time, but after we had our first Pauschalreise this year, I actually have to say I like it quite a lot like this, because you just have one price. You don't have to compare and see how whatever your hotel check-in works out and check-out works out with your flights and whatnot. And maybe whatever, then you have like 6 hours to kill between checkout time and departure and whatnot, because you know it will be a bundle that works very well, where you can basically just get into the bus to the airport and you don't have to wait too long there anymore and so on. There are some downsides, like when you arrive, you have to wait for other people to show up for the transfer buses if you don't pay for a specific VIP service or some shit like that. But overall, I'm really surprised, yeah, that why he in that case isn't doing that and why other people are not, yeah. Last year we've been to Cedar too, this time near Cedar in Evrenseki. I don't know that, yeah, but yeah, so I like the Cedar area. I mean, we mostly stayed in our hotel, and it had like private beach access directly and so, which was quite nice. And only, I think once we went to a shopping mall, but that was a little bit disappointing. And then the second time we went to the, what's it called? Sweetie, what's it called? The old stuff.
What the name is? to see the city with the
Yeah,
old
the
town,
ruins,
the
you
old
know,
town.
yeah, the ruins and the old town and whatever there is, yeah, which was quite nice. And then we actually just walked back from there along the path that is along the beach, which was really quite nice. Yeah, my wife enjoys it a lot because in Turkey there are a lot of cats. Yeah. Anyway, enough about Pauschalreisen. Back to the market. So Barnes & Noble Educational said right now I think it would be quite an interesting gamble in quotes because the risk to here is very limited, and if this is indeed the end of the correction already, then the upside is quite substantial. And even if the stop loss triggers here, then one could re-enter down here again, so on the 61.8 retracement line, or maybe a little bit above it, yeah, for potentially then further or even more upside. Yeah. We could also look closer. So if we just look at that last move here, we could not expansion, we need an extension here. We could just try to sub-label this. So if this is the first wave of that 5-wave downward move, it actually looks like we only finished wave 3, considering that we bounced here, but we also bounced here. So this might be the wave 4 move. So there might be a wave 5 move further down. If we try to label the even smaller wave, which roughly would start here, so that would be wave 1, 2. Then wave 3 here, wave 4 here, and that marks wave 5, which is again this 1, 2, 3. So it looks like we'll get another push down, so maybe not worth gambling right now. Okay, so a little bit more patience might be required. 1, 2, 3, 4, 5. So we assume that this is our third wave here. This is our wave 4, and then if we zoom out again, I think we were on an 8-hour chart. Yeah. Then that actually is nice because we can see that on one hand, so we know that when we have a 5-wave impulse, very often the following corrective pattern will turn around at either 38.2, 50, or 61.8, in some cases on 78.6, and on whatever the exact opposite here would be. Now we are on the 50% line, so that would be one indicator that we might be done here with the correction. However, we also know that when we have a 3-wave corrective move like a zigzag, then wave A, B, or wave C in relation to wave A and B will reach the 61.8 expansion level very often, and in a perfect case, the 100% expansion level. Yeah. So based on this here, so based on this wave A, B, or assuming that this is wave AB of the corrective 3-wave move, we can see that our 100% expansion level is actually here at around $8.31. It's very close to the 61.8 retracement level that we have for the entire 5-wave impulse. With that, we already have two different forecasted or predicted areas for a potential and for the corrective pattern. And now that we sub-labeled the C wave, which again should subdivide into 5 separate waves, so 1, 2, 3, 4, and now wave 5, we can see that for this 5th wave here, where we can use an expansion for wave 3 and 4, the minimum target of 61.8% is slightly below and also in the area. So we can see that those 3 forecasted target areas are between 820 roughly and 840. Which means, in my opinion, it's very likely that right now we will get another small, so a 5th wave, which again, if we look very close, would subdivide into another 1, 2, 3, 4, 5 move. And that will terminate, in my opinion, around the area of 820 to 840, which would then mark the end of this A, B, C correction. And from there, we have then multiple options. Either the whole thing turns into a combination of corrective patterns, which would then usually be followed, so which would mean we get A, B, C, then we get a little bit upwards movement, then we get further corrections that play out sideways in some form, either another zigzag or other corrective patterns. So there are certain combinations that are possible and certain that are not, or it is already the end of the correction and we get the nice 5-wave impulse up. Even if this is only the first corrective pattern of a combination, it would mean that after after this point, we should not get much lower or lower at all, but we should then see more or less sideways movement. So a little bit up, a little bit down. So we just see more corrective patterns lying to each other, but that don't make a new low or shouldn't make a new low, which means right now, actually, There's still a little bit upside, downside, so I would personally consider an entry around here, probably starting at 845 down to 820. That would be the area I think it makes sense to enter. And then from there, we would have insane upside because we would have 5 waves, 3 waves, and then we should get at least another 5 waves up, which then, again, once that happens, or once we see the beginning of that, we could start worrying about how far that will exactly go. One could right now, therefore, either take the gamble that maybe I'm wrong and we're already done with the correction, considering the small difference between that low here and where we are right now, or take another gamble and short it. So basically with the stop loss then at the high that we had here at 967, which is less than 1%, no, less than 10%. No, wait, we're at less than 10%, so around 7% risk with, yeah, like 10% upside or so. So not the best risk reward ratio. Or be patient and wait for this push down to finish and enter in this area here. Stop loss, however, would need to be, if we consider the entire pattern, would need to be at 605. So we still would have a little bit less than 30% overall risk. However, we would also, in my opinion, have 100% or more upside for the following 5-wave impulse up. So I'm actually going to set an alert here at 845 that we will then monitor. So potential end of ABC correction. Consider long position. There we go. So now we have an alert in place. When that happens, we can now move on, and we are going to move on. I actually wanted to, we're going to jump ahead. SMCI had a split. So I'm going to have to clear the local data, and it's going to screw up all our previous charting here. Or not. Definitely screwed it up. Yeah. So there's 100%. So we can remove everything. Gonna throw that back in. So our assumption, or my assumption here, is that we have a 3-wave corrective pattern, which is A, B, and C in progress. And C is currently at the maximum target area, which means we have here also 1, 2, 3, 4, 5 potentially this one here to mark the end. We're actually gonna, if I move that one, yeah, let's move that one further. So add another expansion. So assuming that this is wave 3, 4, and wave 5, we can see that that 5th wave move already reaches the minimum target for that. Again, we're at the maximum target area that we usually would expect for a 3-wave corrective pattern. If we zoom out, we can add a retracement. So we're assuming that we are right now retracing the entire pattern, which means we can see there's still downside. So there will still be more downside for the entire correction. Does that track with the previous labeling? Maybe we're not correcting the whole thing. Let's check the weekly chart real quick. So hard to always recall everything from the top of my head. So from the looks of it, we actually have here our usual suspects. So we have here wave 1, 2, and then basically are in wave 3, and then within that 3rd wave, 1, 2, 3, 4, 5. I mean, okay, in this case, yeah, sorry, I'm thinking silently, yeah. So, okay, so we have 2 options here. So either this is, we could look into closer time frames to try to sublabel it. Either this is wave 1, 2, and we're in the 3rd wave. And in this 3rd wave, we have 1, 2, and wave 3, which would mean this is our wave 1, 2, and our wave 3 actually exceeds the 261.8 retracement. Or this is somehow 1, 2, 3, 4, 5. So this is wave 1. This is wave 2. And here that wave 2, we can also double check. That actually fits nicer because likely we retrace exactly 61.8%, where if we assume this here, we actually almost retrace 100. So this is, in my opinion, the more likely labeling. This here is our wave 1 up, our wave 2 down. Our wave 2 retraces 61.8%. By rule of alternation, we now expect our wave 4, that one here, to retrace 38.2%. I'm going to get rid of that for now, which means we also turn around exactly, or pretty much what the high we had here is 102. No, wait. 114, 122.90. So we got very, very close to the 238.2 extension level of wave 1 and 2, which is one of the target areas for a third wave move. So that checks out. In here with the naked eye, we also can see 1, 2, 3, 4, 5. So that also checks out visibly enough, which means we right now expect a retracement down to $18.38. Now that retracement has to subdivide into at least a 3-wave move. So while one option is that this here is A, B, C, and we're now going up from here, and that's actually the option that I saw the last couple of weeks. Yeah, I really have to find more time, or like, yeah, I have to make more time to be able to not just always quickly take a glance at each chart, but actually regularly work my way from higher time frames to lower time frames. Because either this is A, B, C, and we go up from here, or the other option, since we have to make it down to here, is that this is 1, 2, 3, we get wave 4, we get wave 5, then we get 3 waves up, and then we get another 5 waves down into that area here. Because by rule of alternation, we should expect to reach the 38.2 retracement, unless my labeling on the weekly time frame is wrong, which I don't think it is, considering how nicely it fits the usual target areas that I would expect. However, if we assume that this is wave 1, 2, 3 down instead of A, B, C, we would expect that this push here actually reaches the 261.8 retracement. So we didn't bounce at the usual 160 or at the 161.8. So we would expect actually this is 1, 2, and now that move here will go down to 29 or 25. Then we get wave 4. Now that's already challenging, because if we then get wave 4 and wave 5, we already would be down here. So okay, let's take it again from the top. So monthly, weekly. Oops, wrong. Even here we can see 1, 2, we bounce at the 238. Then we have a correction, but it's actually a bigger correction here from the looks of it. So while this looks like an ABC pattern, it actually has to be 5 waves down here, 3 waves here, although not perfect, and 5 waves down here for an ABC that again retraces sorry. So if that is our wave 1, 2, then we have our wave 3 that reaches up here, and we have our wave 4 here. Our wave 4 retraces till here, which means then we have our wave 5 up here, which, let's check. So the one thing that points towards that is that we bounce exactly at the 238.2 extension level. Now, if we add an expansion here, so assuming our wave 4 is basically this here, and our wave 3 is this, we see that the 5th wave barely exceeds our 100% target area, marking this or making this possibly a 1, 2, 3, 4, 5 impulse. So like we said before, now if that is a 5-wave impulse, it's followed by a corrective pattern that is somehow A, B, C, or yeah, should be like this with a strong wave C, which means we have wave 1, wave 2, and we are now in our 3rd wave upwards. Now for that 3rd wave upwards, we likely have wave 1 here. So we can see 1, 2, 3, 4, 5, correction, and then our wave 3 target bounces relatively nicely on the 361.8 extension level. Yeah. So that's already in quotes like what we have here. Now, considering again that we retrace 61.8% here, we would expect wave 4 to only retrace 38.2. Now we can also use Kennedy channeling technique, which would give us the following base channel. So roughly like this. And now currently we would still officially be in the so-called acceleration channel, where we take point 1, our high point for point 3, and a parallel to point 2. And theoretically, we would wait for it to actually break out to the bottom to have confirmation that we are in wave 4, which in this case we may or may not get. So depending on how long this correction drags out, obviously very often, not always, but very often, the fourth wave will touch the top of the base channel. It doesn't always happen, but often enough. Hi Akashi, great to have you here. So, and which means it could drag out a little bit because only back here would be the case where the 38.2 retracement would overlap with that base channel. Yeah. Additionally to that, we can overlay or use a trend line here, which is our deceleration trend line. We are jumping a little bit ahead because we don't have our official wave 4 confirmation. Which means once we break out from here, we might assume that we are now indeed in fifth wave territory. So overall right now, while it's tricky to sub-label this, because if we go closer, this fits nicely with an ABC pattern that terminates here and will turn around. So it might be worth a gamble getting in right now. But on the other hand, we would expect at least a retracement down to 38.2. Now we can double check if we, I mean, we retraced 23.6, which is the inverse of the 78 point. No, it should be not 23.6, but 21.4. Math, yeah, so 21.4 should be safe as template, retracement, safe as, apply. Yeah, but we retraced 21.4% here, which would be the inverse of the 78.6, which would mean the rule of alternation didn't hit this time, yeah. So, but again, I mean, we're talking about rules and not about certainties. And so it's still possible that we actually finish here A, B, C, but considering the bigger picture, I actually think it might be more likely that we'll get another further correction down, so to the $18 mark. However, if somebody were to short it now, stop loss would need to be here, so we would have 200% risk with 50% upside, so that doesn't make sense. Personally, I would keep an eye on it. And for now, really, so I would consider entries around the $18 to $20 mark. Because that should mark the end of the correction. And then from, like not from there, but until then, keep an eye on it, because if we visibly get upwards movement here, we'll have to then validate if it's just a corrective pattern, which would mark A, B, C, then somehow this already should be, this should be 5 waves. Unless it's a flat corrective pattern, then it would be 3 waves, 3 waves, 3 waves. But yeah, like given time, we might be able to see that. Yeah, so SMCI, I think long-term or mid-term still downwards movement to be expected, although there are signs that we might have bottomed already. But I think the more likely scenario is that we still go further down to 18, 15 roughly. So here to the 38.2 retracement, yeah. Yeah, so that about SMCI. Now, before we actually move on, I'm going to have a sip of Apfelschorle, not sure how to, or sparkling apple juice, I guess would be the right word in English, yeah. And then we're going to move on. We had Barnes & Noble, we jumped to SMCI. We are going to next, actually we had GameStop in the beginning, Immersion. Do we get finally some development here that tells us a little bit more into, yeah, so we're still in the sideways direction and we didn't go lower than 841. So there's still the assumption that we actually might have bottomed here, overlapping of 61.8 retracement with the 100% expansion level, and with a, yeah, like gamble entry possible. So stop loss at 841. Really little risk. and upside, if this is indeed the end of the corrective pattern, upside quite substantially higher. No, I'm probably still not getting a chart. I don't know why the chart for no labs hasn't been loading for the last, I don't know how many streams, and I've removed the symbol, edited again, and not sure what's causing the issue, but the issue is there, yeah, so someday I'll figure it out. I'll try every day for a little bit, and yeah, sometimes, or yeah, recently it doesn't load, but yeah. But we see that we were at 32 cents yesterday, if we recall it correctly. Now we're back at 27. Again, I think, so I really will start worrying and try to fix the chart issue once we go below 20, because that's, I think, where it should go. Costs, we're still waiting to see if we hold on the 50% retracement, and if the correction is finished in this free wave move down, and this is somehow the next upwards movement starting, or if we will get a push lower, and we'll then have to try to make sense from whatever pattern that then will be. So no doesn't low. Immersion, we're waiting. Cost also, it actually also is an interesting, in quotes, gamble entry. So one could have the stop loss at 652, and if it indeed is already the finished correction, the upside would be 200-300% upwards. Obviously, considering over a couple of months, but still potentially huge returns. NEO, that's one thing we'd have to check out. So there we had actually there the pattern actually played out nicely. I know that China is pumping money and whatnot, and reducing or forcing banks to reduce the interest rate even on existing loans and whatnot, but we have an almost perfect Elliott wave pattern here. So we had our wave 1, 2, and that basically pointed towards our wave 3 or that's the right one, yeah, pointed towards our wave 3 target that we haven't actually, that we hit here. 538.2 gets touched, and if we sub-label this third wave, we have our wave 1, 2. Let's actually adjust that so we can see that. So that's our wave 1, 2. Then our wave 3 breaks at the 261.8 extension level, which is the most common level for a third wave in my experience. Yeah. Now with that third wave, we can use wave 3 and wave 4 and use an expansion, and we get our minimum and our maximum target. And we see that we, in this case, shoot a little bit through the maximum target, but we basically have 1, 2, 3, 4, 5, which now makes up the third wave. And that third wave bounces at, so we can also see here, sorry, that's the wrong one, this one. Again, we bounce at the 538.2 extension level. Which means now we should most likely get to see wave 4, and then from there we get a fifth wave push. So while the short term might be chance to enter for better prices, mid and long term there should be more upside and at least another 50% growth, in my opinion. The only alternative that's possible that I'm not going to sub-label here, but or at least not in detail, would be that in that fifth wave we're actually not done yet, in which case we have to consider that this here is wave 1, 2 of that fifth wave, and then within that we need to have, I don't know, like that might be the third wave. I mean, technically this could be the third wave, and it's a very short third wave. We reach the minimum 161.8, we bounce from here, and then this is the fifth wave, which would be an extended fifth wave. But point being is there is the small chance that that wave isn't fully finished, because to the naked eye on an 8-hour chart, it's not nice 5 waves in that pattern. But if we look at the usual target areas and so on from all of them, I would expect that this is 1, 2, 3, which means we would now expect a retracement of this entire third wave, which would mean we should potentially see an ABC move that takes us down to $5.84. And then from there we get our fifth wave further up. Now again, it's possible that we first get a little bit more room up, which then means that also the retracement levels, or the next correction that follows, the next corrective pattern that follows, would not retrace as far. But I think from the looks of it and from the levels that we hit here, that it's likely that we actually reached our top here, are now getting to get our wave 4, and from that fourth wave we will then get our fifth wave further up. Now I'm going to undo a few things here like this, and then we're actually going to add, wrong button, add the channels that Kennedy channeling technique offers us. So by connecting wave 1 and 2, we get our so-called base channel. Now, very often, as said, the fourth wave would go down and touch that base channel, which will not be the case in this time. However, then sometimes it will reach multiple. Oh, I didn't want to do that, so I actually wanted to copy that and paste it. There we go. So roughly, nope, come on. Oh, not a base channel. Oh, I moved the wrong channel, just a second. So this one is correct now. So wave 1, wave 2. That's the one I have to move then. Okay, so here. And then can do that same thing one more time. And here actually at the median. And then again, we look at the entire wave 3. And yeah, so we might reach the line here, so around $5.70 or so. That would be my rough assumption in a corrective move if we're indeed finished here. If we're not finished here, then again, we would right now, so if we use Kennedy channeling technique, our assumption would be that this is wave 1, parallel through wave 2. Can actually double check based on Kennedy channeling technique. Yeah. Borderline, since we move sideways here, Kennedy channeling technique might point towards this is wave 4, so 1, 2, 3, 4. I don't think that's supported here because we don't bounce on one of our usual levels. Although we get close enough or close-ish to the 38.2 level, yeah. So, but I think still that this is going to be like this. So that's our so-called acceleration channel, and that we are right now most likely in the deceleration channel for wave 4. We will know for sure if or once we break the bottom of this channel, then we would have the confirmation that we're indeed in wave 4. And then once that wave 4 finishes or plays out, we'll get our wave 5 up. So much about that. Yeah, moving on. What else do we have? Let's actually finish it up real quick. Let's take a look at NVIDIA, where, yeah, in my opinion, we finished the 5-wave move up here, and so we should correct a little bit further down, so to 113. I mentioned it yesterday, which will then finish 5 waves, and then a correction till here at least, and then from there we may see another upwards movement. Time will tell if I'm right. And similar, let's finish up with SPY real quick, where we had the same thing. Yeah, so we reached the 100% maximum target area, and it's possible that we now get to see our ABC to correct this entire move here. So down to roughly 548, 550 before we may or may not see the next 5-wave move up. And if we look at not NVIDIA, but at NASDAQ, there it's similar. We didn't reach the 100% target, but we already have a nice 1, 2, 3, 4, 5. There may in the NASDAQ still be a little room up for a further push. So I would not be shocked if it happens. So right now I'd stay out of it, to be honest, and either wait to see if there's a little bit more upside before entering short, or wait for the corrective pattern to play out, which should again correct this entire 1, 2, 3, 4, 5 move. And then find entries at the 38.2 retracement, for example, for long exposure. And yeah, that's pretty much it for today. Now, yeah, what do we do for the rest? I mean, yeah, not rest of the stream, but yeah, like since I already have you here, I'm currently considering or actually looking into hiring an executive assistant or a personal assistant to delegate a little bit of work. It's like there are so many things that I'm doing, and the thing is, like, I enjoy all of them, or 99% of them. So like this stream I enjoy, and I would like to have more time for it, but I also have to dedicate a certain amount of time every day for administrative stuff and accounting and so on, or answering emails, or yeah, I also started recently when I set up the new home server that is down here, that's running Unraid. I started a new blog to share some of the things that I figured out about Unraid and how to set it up and so on along the way, that are not yet written down in some way that's easy to find. And so then I dedicate time to write blog posts, yeah, which obviously is also something that I could delegate, or partially at least delegate. Yeah, and so I'm looking into getting a new assistant, or not a new assistant, but an assistant for the first time. And that also takes time to, you know, like write the job description, then schedule the calls, then write the documents that are for the assistant to make the work of the assistant easier, so I'm not bothered with a million questions for everything. And yeah, so not sure where I'm going with this, to be honest, just wanted to share. So it's like there's a never-ending story of tasks, especially when you're interested in multiple things and not just in one, which sometimes makes me feel bad that I'm, for example, unfortunately, as a result, neglecting my main YouTube channel and just don't find the time or not making the time to write new scripts for videos and record and publish them. But hopefully I find a good assistant that can take care of some of the stuff that I have to deal with, or that's on my plate, and free up time to deal with some of that stuff, or to then actually sit down and work more on certain videos again, yeah, or on certain on the channel again. I also would like to be active more on Twitch. Right now I'm only streaming every Tuesday morning, but sometimes, like today, I actually have to skip the stream because my to-do list is just so full that even blocking out those 4 hours would just screw up, or like, yeah, like screw with other things too much. And it's like, I don't know. I mean, I enjoy what I'm doing. I enjoy even those, I really enjoy the daily market mastery streams. I know they're not as detailed that they could be, but it's mostly a time issue. I mean, trying to, in quotes, knock them out quickly, but still provide information. And I hope that, yeah, I hope that given time, or like given an assistant that can take some of the things off my plate, I'll actually be able to dedicate a little bit more time. But also, like, what I would like for the, so like just sharing here, and feel free to, so I'm gonna answer it in a second. Yeah. So what I would like, for example, for the stream would be, because the stream is relatively small, so YouTube says we right now have 5 viewers. One of them is my second screen for sure, or maybe not, maybe they filter by IP, but where I make sure that the stream is actually running and where I see the chat properly. Yeah. So, and it would be nice, so I don't have the time to, you might definitely notice that sometimes, whatever, like today we look at a stock, we might look at, like we did at SMCI or wherever you came from, yeah. Or I already forgot what we looked at, like Barnes & Noble or so, and I share specifics. So I go through the effort of labeling it from the beginning and get to a specific prediction. But tomorrow when I start the stream, I see this mess of lines on the chart, and I actually have to quickly recall what was my recent assumption or conclusion based on that. And sometimes that might get to mistakes. So today we label everything and the conclusion might be, okay, short till here and then long. Yeah. Tomorrow I look at it and might just see a smaller excerpt of it and might make a wrong assumption. So it would be nice to, for example, have the personal assistant to watch the stream and maintain not a Google Sheet, since we are moving to Nextcloud from Google, but a table, for example, with each individual stock that I'm looking at, and some keywords. So like, for example, if I say, okay, in my opinion, we are here in wave 1, 2, 3, so we are in wave 4 right now, and within the wave 4, there's an A, B, C pattern in wave C. So if the node would then be, okay, BNet, wave 4, wave C in progress or so, or consider entry, or should go down till whatever, so that then before a stream or during the stream, I could have that table open on the side with the notes from the previous stream, maybe even with a note that mentions in which episode I last covered the stock in more detail, so that I can then see, okay, that's actually what I labeled here. Because I mean, honestly, looking at this, it really takes time to figure out what all the lines are supposed to mean. And yeah, so to improve the quality of the stream on one hand, but then also to be able to a little bit more actively promote the stream. So for example, I don't want to make the time, or it's just not profitable enough because the channel is not monetized, to after the stream watch it again and, for example, say, okay, from minute 5:17 to minute 9:18 I'm talking specifically about Apple, and then make a clip, or at least grab exactly the link with that timestamp and share it on, I don't know, Twitter or something like that, to ideally long-term get some additional viewers from there and slowly grow that community as well. Yeah. Or by keeping track in a, let's call it Google Sheet. Yeah. For example, write down so my predictions, and keep track of how often I'm right. Yeah. Because it's really hard to recall every time I say, okay, I think we'll go down here. But if for some reason I don't look at Barnes & Noble Education, or maybe for a week, then the pattern develops further, and I will not recall that I said, okay, it should turn around here. Yeah. So even if I wanted to, but I likely will not recall it. And so having some kind of, again, like an assistant in that case that keeps track of that might also interact with the chat a bit or whatever. Yeah. But basically keeps track of that, and then could also, for example, if I'm fairly certain that already weeks ago I labeled Neo in a way that was like 1, 2, 3, 4, and we'll get wave 5, yeah. And now that it happened, doesn't matter why it happened, it matters that it happened. It would be nice if I would know in which episode exactly I made that forecast, and then maybe take exactly that snippet from the episode. Okay, you know, like, who could have told you already, I don't know, 4 weeks in advance that Neo is going to increase by 50% or whatever, yeah. So yeah, so I'm looking for an executive assistant for that. Yeah, like in terms of, so you said employed assistant or in some kind of business relation, how many hours? I'm actually looking for a freelance on Upwork for that. And I'm gonna most likely hire somebody from the Philippines. There are people there. I mean, it's a little bit tricky because there are a lot of tasks that I want to delegate, and the majority of those only require English, which on the Philippines is not an issue. They also don't have, or there are enough freelancers there, or a reasonable amount of freelancers there that have no problem working German hours. Yeah, like, so that are willing to basically start at noon and work into the night a little bit. And the reason why the Philippines is obviously because it's super affordable. You find freelancers from $5 to $10 per hour, so it doesn't cost an arm and a leg, which is especially important initially, where it's not about really revenue generating tasks. So it's really an expense that eats away on our revenue, and that has to be covered by our existing business. And so having somebody that starts at a lower hourly rate has the benefit it's affordable, because if we consider German hourly rates, for example, and you consider then if you employ them, the Lohnnebenkosten, so the social payments and pension payments and all that stuff, and health insurance and whatnot, yeah, you quickly look at, like, I mean, the minimum hourly rate is like already, what is it, 12 euro 50 or so. So you look at around 20-25 euro per hour. So even if you just need somebody 10 hours per week, you suddenly spend 1,000 euro per month for a person that still does. It's not that it's completely, that the work is not worth doing or unvaluable, but it's just not, the relation doesn't fit. So if it's like watching the stream and sharing some snippets of the stream or so, it's a task that's not worth 1,000 euro to me. But if I find somebody on the Philippines that is available for, let's say, yeah, like 2 hours per day initially, so 10 hours per week for starters to just get working together, then that's $50 per week, so $200 per month. And that's definitely a marketing expense that's worth it, especially it shouldn't take 2 hours. I know today's stream is a little longer, but very often the episodes are like 15 minutes. So watching them, and I mean, in that case, it wouldn't be watching them live maybe, but maybe watching in the morning, so German time morning, or during the German night and Philippine morning, watch the recording and prepare the Google Sheet, and maybe prepare the postings for Twitter and whatnot that are about like previous predictions and so on, yeah. And obviously it's also about being able to delegate other work. So like I said, every day, for example, I have to create the invoices for the payments that we received for our software business, because our software just doesn't have an integration with our accounting software yet, so it's a manual effort. And since we are forever working on a relaunch of the entire software, there's no reason to add that integration into the existing product, which means it's like every day anywhere from 5 minutes to half an hour of effort for me for something that a freelancer can easily do. So just look into the Stripe account and the transactions, and then based on the email address there, create the payments in the invoice or accounting software. Yeah. So those are things to free up. And yeah, like, interestingly enough, today I checked actually for the first time, and there are also freelancers on the Philippines that have, some of them that have even German language certification, so like C2 level for like $10 per hour. So they're fluent in English, obviously fluent in Tagalog since it's the language in the Philippines, and speak, or at least on their profile, according to their profile, should be able to maybe not speak German fluently enough. If you never use it, it gets rusty, but at least be able to, you know, like read it and write it fluently enough so that they could also deal with, I don't know, like communicating with our accountant in Germany. So if the accountant requests some documents, that I don't have to start looking in our document management software or so, but the freelancer can look up the documents, reply to the email or so. Yeah. So I think that's going to be a step in the right direction. I enjoy the trading stuff. I enjoy the trading streams. I have to admit, I regret a little bit. So if we switch back for a second, I regret a little bit that on one hand, I'm happy that I sold all those cash secured puts against GameStop when the implied volatility was high, because it earned me a couple $1,000s in premiums. I mean, those 500 shares, obviously, or if we look now, the portfolio has a value of around 12,000, plus there are another 100 shares of GameStop that I bought that are transferred away. So overall, the value of the portfolio is around 14,000, which is still a roughly 30-40% increase since I moved from eToro to Interactive Broker and started the Interactive Broker portfolio. So it's definitely not bad since the middle of May. But on one hand, I'm like a little bit, yeah, I don't regret, but like it annoys me a little bit that obviously my capital is stuck here, since again, I hold GameStop shares outside of Interactive Broker anyway. And seeing like the nice opportunities like Novavax, which we didn't look at today. Yeah, so let's circle to Novavax for a second. Seeing the nice opportunities like Novavax, for example, or what we saw today, Barnes & Noble Educational, it vexes me a little bit that my funds are tied up, because I would really love to, for example, just place a pending order here for, I don't know, like 1,000 or 2,000 or so, to say, okay, buy from here. Not just to put my money where my mouth is, but also to profit from what I see, because in my opinion, I'm right often enough. Of course, I get it wrong sometimes, especially in penny stocks, yeah, because they tend to not follow patterns as reliable as bigger stocks. But on the other hand, I think I'm right often enough to regret a little bit missing out on certain trades right now while the funds are stuck. But on the other hand, I also see that, I mean, with GameStop, I'm fairly certain, I mean, I see the possibility that we get the push down here to the $15 area. But then I also see that at $15, GameStop would be hugely undervalued. So, I mean, not hugely undervalued, but undervalued nonetheless. And so even if that were to happen, I'm kind of fine to hold the pending loss and wait it out. But yeah, it's like, it's probably not it's not that GameStop is the issue on my GameStop position, but it's like the slow moving thing. So like last year I was day trading the NASDAQ with 20 times leverage, for example, which is obviously like more exciting and comes with bigger swings. So like 5-digit portfolio changes and sometimes in minutes. Yeah. Yeah, like, so I hope that I get more time, or that I will be able to dedicate more time for the trading, and that I then also by that time maybe have some of that GameStop position liquidated. I mean, even if I liquidate it now, it would be at a profit if I consider all the premiums that I earned so far. And to just have a little bit more play money again. So I went a little bit I got a little bit greedy with the option premiums in GameStop and sold basically cash secured puts that then used up the entire available capital when they ran into, or as they ran into the money, instead of like selling one put less and at least having $3,000 or $2,500 in liquid capital more available in the account. Yeah. And yeah, so I had 70% in GameStop at one time. I exited some when the latest spikes came, bought a good sum back to keep it and trade it, invest with the rest. Yeah, I mean, I also had a huge chunk in GameStop back then when it started to take off. So, and I was holding for some time, and I reduced my position along the way a little bit, but mostly because I have no doubt that there is more upside. Doesn't matter if it's just a short squeeze or if it happens organically, yeah. But I also have to consider like the opportunity, or I'm considering the opportunity cost, yeah. Have a great rest of the day. See you then soonish. So I have to consider the opportunity cost, that basically while the funds are sitting there, I mean, if you put the money in GameStop, I don't know, I mean, would have to look at the chart, and so let's say a year ago or so, and yes, you're in profit now or so, But during that year, or let's say maybe I'm just too full of myself in terms of my assessment of my own skill. But when I see things like, again, the patterns in Barnes & Noble Educational, for example, I really think that, okay, from this point forward, there is going to be a huge upside. So there should be a 5-wave move up, which means by the end of the year, we should be, I don't know, be able to realize 30% here, which is often better than just holding on to your position and waiting for it to recover or to finally get into profit. So I really would like to like just gain some flexibility back again. Anyway, already exceeding the usual time limit by quite a lot here today. Thanks Akashi for stopping by. Thanks Olga for stopping by. Enjoy the rest of your vacation in Germany. Yeah, so not sure if you're at home, but in Germany. But since you say kindergarten, I guess picking up the kids or something like that. Yeah, like if you took something positive away from the stream, as usual, don't forget thumbs up, like, subscribe, enable notifications, and then see you all together again tomorrow around 5 minutes before market open for another episode of Daily Market Mastery.